Hey YouTube, welcome back to Project Finance, and today we're going to go over week 2 of the Dividend Challenge. The Dividend Challenge is where I deposit $200 every week to my portfolio, no matter how good or bad the market is. And for right now, we're still going to just focus on M1 Finance. Hopefully by next week, I'll be able to show you guys my Robinhood and Webull account. Those should have about 5 to 10,000 each account, and those accounts are going to be used for daily purchases versus M1 Finance, which is kind of just like leave it there and just let it grow. With that being said, let's get into it. So let's log in here. And I think the 6,400 dropped already. I deposited $6,000 a couple weeks ago, and I think finally transferred over. And then the 200 for last week and 200 for this week, so 6,400. As we can see here, I'm at $10,451.74. So I am up a total of $51.74. And like I said, I should have started with $10,000 to begin with, and then $200 from last week and $200 from this week, so it's $400. So up of $51.74. And I did buy some stocks last night before I got into the account. I think I was up around like $40 in total, so I think I'm up another $11. Like I said in my previous video, I wasn't planning to check every week, just the Monday when I record this video, so this is like my live reaction. But I had to check yesterday because I wanted to make sure the money hit the account and that I chose the right stocks, because I didn't want to invest the whole 6,000 in what I had already chosen. I was going to choose a little bit more stocks. So let's go through the account right now. And aggressive ETF pie, it's up 2.12%, a total of $54.49. Let's see here. Majority of it is the VOO, which is the S&P 500, up $30.15, and then small capital, which is up $19.83, and VEA, which is for developed markets, which is up $9.72. Everything else not too much of a difference. Only LQD is down 2%. Let's see what happened here. Oh, it's because the dividend dropped. Typically when the dividend drops, the amount that the dividend is, it drops by that much. So like if it's like 32 cents, it drops like 32. The stocks drop 32 cents. It usually comes back up, as you can see. Let's see other trends here. This is a bad one because as you can see here, like on February 2nd, it dropped 34 cents. And look over here, February 2nd. Hopefully you can catch it. It's the 3rd to the 4th, it dropped a little bit and it kept dropping and it comes back up. So it's pretty normal that it drops, but this one's kind of abnormal where it drops quite a lot. Yeah, it kept dropping for the last 6 days. So hopefully it comes back up. So let's go back here and let's look at the growing pies. This account's down $1.61, down total of 0.12%. Not too bad. As you can see here, I broke off to 35% of AT&T. I had 75% last week, and I gave it to GSK, IBM, and Exxon. So GSK is a pharmaceutical company. I don't have any stocks in health, so I decided to pick that up. And same thing with IBM. I don't have a stock in tech, so I bought IBM. And then Exxon, which is gas. And I believe all three of these are quarterly dividends. Let me double check. And yeah, they're all quarterly dividends. GSK has a 4.51% and is doing pretty well. It's climbing back up. And let's look at the other two. IBM is also a quarterly dividend, and their dividend just dropped on the 6th. And like I said earlier, let's see the dip here from 5.6 to 5.7 because dividend dropped. That's typically what happens when dividends are going to drop. The stock just drops by that amount. And for IBM, their dividend yield is 5.3%. And let's go to the last one, Exxon. Exxon's also a quarterly dividend. And the last dividend was given on February 9th, 2020. And their dividend yield is 7.54%, which is pretty high. I think that's just because they dipped. I think typically it's around 5%. And then let's look at the monthly chart here. They're also climbing back up from the depths of coronavirus here. I think gas is really good to buy right now because of not a lot of people are driving, so the stock markets is like kind of bottoming out. And since United States kind of slowly opening up, people are going to use more gas. Gas prices should go back up. Supply demand. And as you can see here, they're usually around the $60 mark, and you know, it's pretty comfortably around $60 to $80, and now it's at 40, so it's like almost half price. So I think that's pretty good stock to buy. It's pretty stable. Only thing about gasoline that's bad is that people want to go environmentally friendly and buy electric cars, and that makes gas prices or gas companies go down in price. But I don't think in the foreseeable future, probably next 3 to 5 years, everyone's go electric right away. Also, with all the government assistance that we're giving to citizens in America, I don't think we're gonna have tax incentives to give to people to buy electric cars like they had for the Tesla and the Prius and stuff like that. I know in California, they're giving like $5,000 as an incentive to buy an electric car on top of having the carpool sticker. But I think with all this debt we're already incurring, I don't think that program's gonna be in the back burner for now. And that program's already kind of declining. I remember when Tesla first came out, it was like $7,000 of rebate, and then it went down to $5,000, and then $3,000, and eventually it's gonna be zero. It's based off of how many cars they sold, and once they meet that quota, the rebate's gonna be gone for California. I'm not sure about other states, but that's how it is for California. I think some states might not even have a rebate program, but that was what it was for California. I think federal also gives a incentive as well. So you get a state incentive and you get a federal incentive. But yeah, I think it's gonna be gone after all this assistance that's giving out. So let's go back here and let's look at the last pie I have here is dividend hunting. It's down 32 cents, down 0.02%. But let's go into dividend hunting. And I did buy 2 more funds. I bought BIT, which is BlackRock Multi-Sector Income, and I bought DHY, which is Credit High Yield Bond. They're both just funds, and BlackRock's dividend yield is pretty high. It's at 10.176%. Looking at the chart here, this is a monthly dividend as well, and looks like it's flattening out right here. So I felt comfortable kind of investing in it, unless there's gonna be a second wave of coronavirus. But if there's gonna be a second wave, then my money's like gone anyways. If you look at the chart, they've been pretty consistent. This is pretty much what you want for a high yield dividends fund. Just have it consistent and then just pay off your dividends. And at 10%, it's pretty worth it. Only thing scary is like when this happens, it got cut like half, from 16 to 9, almost half. It's kind of crazy, but it's like almost every company's like that right now. And let's go back to the last one, which is DHY. DHY is 10.59%, and it's also monthly dividend. And as you can see here, it's just consistent at $2.50 for last year, and now it's kind of like flattening out. If you look at the month, it's kind of flattening out right now. I felt like it's a pretty safe choice to choose for a high yield dividend account. Let's go back to the pie, and I split this pie up. I took 25% from GOF. I gave 15% to BIT and 10% to DHY. Just test it out for now. And as you can see, GOF went up after I took the 25% away, which is pretty interesting. So overall, up $52.56 and 1.02%. And yeah, better than being negative. And actually, when I was doing this last night, I found it really tough to choose what to split and then give a percentage to another firm. It was really difficult because I was like, oh, they're gonna do well, and you know, yeah, so it's a little different from buying stocks. Just because if I drop like say $200, I can buy $200 in like AT&T if I wanted to. But this one I had to like take off of this one to put it to somewhere else, which is kind of interesting. The different mentality when I was doing this portfolio. But I also felt like having this many stocks is kind of too many. I never held, like, let's see how many we have here. I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 plus 4. I have 17 stocks. I never held 17 stocks in my life. Like out of my 5 years of doing stocks and trading and stuff like that, I never held 17 stocks at the same time, which I don't know, it kind of feels weird having that many stocks. Because like if you're having like a stock that's like 1% or like 5%, like what's the point besides diversifying? But sometimes diversifying too much is like bad. But I don't know. Yeah, that's just my thoughts. But that's gonna wrap it up for today's video. Let me know down in the comments below how many stocks you guys have. Do you guys have more than 10, less than 10? Yeah, for me this is kind of different, and the way I'm choosing it percentage wise, because it's M1 Finance, it's a little different for me. And thank you guys for watching. Be sure to like the video and subscribe to the channel if you like this content, and I'll see you guys next one. Bye.